Okay, so let me remove this part. So we would first look at the principles of revenue. Then after looking at the principles of revenue, we are going to move on to doing the actual question, right? It is good for us to obtain an understanding of the particular topic that we will be answering, right? So now, this is just a summary and it does not contain all the information of revenue, right? It only contains the most important characters that you can find in the revenue recognition and measurement criteria, right? So now, what we are going to do is we need to know that um, an entity can recognize revenue, right? To dissect the transfer of the promised goods or services to customers, right, for an amount. So basically, that's the core principle of revenue, right? So essentially, we want to recognize revenue to show that we have transferred goods and services to customers for an amount. So let me just write it for you guys here. So this is the core principle, right, of revenue. So core principle. So essentially what we want to do is that, or any entity rather, so we could state that an entity, let me expand this. So today's class is also going to be 60% theoretical and 40% practical, right? So the reason why I'm touching a theoretical aspect today is because of in your first test, theory is going to be where you could score easy marks only if you are able to apply the theoretical aspect, right? Into an application manner, right? So I'm going to show you how we are going to do that. So now, as I'm stating about the core principle of revenue is that an entity shall recognize revenue to show the transfer of goods or services, right, to a customer or customers for an amount in consideration, right? So this is the core principle of revenue. So now, in this core principle of revenue, what we need to take note of is that there are 5 steps. There are 5 steps of the revenue recognition, right? So we are going to do the steps one by one, right? But when you are answering a question, you need to be mindful of which ones are applicable to the question, right? So not all 5 steps are often applicable. Sometimes the required want you to answer based on the recognition criteria. Sometimes they want the measurement. So I'm going to show you guys which ones are the recognition criteria and which ones are the measurement criteria, right? But they are all within this 5-step model, right? So the first one and the easiest one, right, is to identify a contract. You have to identify a contract with the customer, right? So here you have to identify a contract with the customer. So now, if I am going to go deeper into this, obviously I'm not going to list it here, but I'm going to say it, right? So how do you identify a contract with the customer? Firstly, you need to identify that the parties have approved and are committed to the contract, right? Or let me just write it. So you have to check whether the parties are committed and approved the contract, right? And then what you could also check is that both parties can identify their rights and obligations, right? Obviously, the right of the seller. So the right of the seller, um, let me- so the right of the seller is to receive the product, right? And then the obligations of the seller is to do what? Is to transfer the money, right? And then we are going to also have what? Within this identification of a contract, we are going to need to identify what? The payment terms, right? So identification of the payment terms, um, obviously, when you are making a purchase, you'd be further told that this is 10,000, for example, right? Sometimes you'll not be told that this is 10,000. Sometimes you need to identify it because of sometimes consideration can be made monthly where you would need to calculate the present value, right? But let me not confuse you guys on that. That will be discussed when we do integrated questions, right? So now, another thing that you have to identify is whether the contract is commercial substance, right? So what do I mean by commercial substance? It needs to change the timing of the cash flows of an individual. For example, if you had 5,000 and now you buy something of 2,000, you'll be left with 3,000. So that transaction is commercial substance. And it will also be the same for the company. It will also have what? Commercial substance for the particular company. Now, another thing that you can consider, the company must be able to collect consideration, right? Okay, so now um, we are done with step one. We are going to move to step two. So now pertaining step two, what we are going to identify or on step two is the identification of what? Performance obligations, right? So it is the identification of performance obligations. So performance obligations need to be distinct rather. They need to be distinct. And how can performance obligations be distinct? It is only if a customer can benefit from the product um, on its own or together with other available resources or readily available resources, right? And then again, it needs to be what? Separately identifiable, right? So, so what do I mean by separately identifiable? So, separately identifiable is something that should not be combined, it should not be modified, and should not be interdependent, right? Okay, great. So now, we are going to move to step three. So step three is to determine the transaction price, right? So the transaction price essentially it is what the entity is expected to receive, right? So nothing interesting really about step three. But now step four, it is to allocate the transaction price, right? And now you would allocate the transaction price based on the standalone selling prices, right? So now, that is step four. Now we are going to move to step five. So with regards to step five, um, we are going to recognize now, right? So essentially, this is when the customer obtains control, right? So this is when the customer does what? Obtains control. Okay, great. So now these are the 5 steps of the revenue recognition criteria, right? So we are now going to read the question and understand and apply, right? So that we can move from this revenue element and move to PPE, right? Okay, so first thing that you must do before you start answering or before you start reading the scenario, you must read the required. You must understand what you are dealing with, right? You must understand from which perspective you should answer, right? So now, uh, so we will be looking at the required A and B, right? So required A, it says, um, we need to discuss when Pixie Dust should recognize revenue for the toy figurines sold to Toys R Us Ltd in its annual financial statements for the year ended 31st December 2022. So every time you read a required, identify what is the main topic here. Here it is revenue. Okay, great. You can make a mark for yourself that, okay, whatever that you will be answering here, you are going to answer from a revenues perspective, right? Okay, so this is for part A. Now, when we move to part B, it says prepare all journal entries to account for the certain property, right? And the Toys R Us contract. In the accounting records of Pixie Dust Ltd for the year ended 31st December 2022. Right? So now, every time you are seeing a property, most likely you are going to be answering from the perspective of PPE or investment property, right? So now, every time you see a contract, right? So a contract can either deal with leases or revenue, right? So one of the two. So in this required, we have options. We cannot as yet conclude, right? So the only thing that can make us to conclude it is if we read the scenario, then we'll be able to conclude, right? So now let's go to the scenario. One thing that we will be dealing with is A first, and then after A would go to B, right? So essentially, this part of certain property will relate to B, right? But now we are interested in this part so that we can answer A and get it out of the way so that we can answer the next question. Okay, so now Pixie Dust Ltd, therefore known as Pixie, is a South African manufacturer and retailer of baby and children's products and educational toys. Pixie also manufactures special orders for companies that require corporate branding. The company has branches across South Africa and grew significantly in the last few years and has a large footprint in the toy market. Pixie has a 31st December financial year end. The following relates to some of the assets and transactions of Pixie for the year ended 31st December 2022. Right? So now, note number one, Toys R Us contract. Pixie received a special order on the 1st of October 2022 from Toys R Us to manufacture 500 toy figurines. So Toys R Us requested that the toy figurines be specifically designed to look like their company mascot due to lack of storage space. Toys R Us requested Pixie to keep the toy figurines at their premises until they free up storage space. Pixie agreed to keep the figurine in a separate room at the warehouse. Right now, these products are being kept at the separate room, right? Because of there is lack of storage space, right? So the client requested. So essentially, what we will be doing is that we will be holding stock for the client. So it needs another important element of revenue, which is called the bill and hold criteria, which I'm going to discuss with you, right? So it meets the bill and hold criteria. Immediately when you hold trading stock for a customer, and the transaction is already successful, it is a bill and hold criteria, right? So now, um, so they are held until Treasury collects the figurant um, on 31st January 2023. The separate room can only be accessed by authorized Treasury and Pixie employees. So these products are specifically made for Treasury. That's what we are getting from this scenario, right? Or this paragraph. So now, Treasury will be responsible for insurance costs on the figurant. When they are stored at the Pixie warehouse, the total transaction price as stipulated in the signed contract amounted to 557,500. So now, another interesting fact. So Pixie does not provide custodial services to its customer and decided to estimate the standalone selling price for this service by using the residual value, the residual approach. So the cost to manufacture each figurine was 800 and Pixie charges 25% markup on cost or margin on cost, right? So they mean the same thing. So now, these principles are important not only for this topic alone, for most of the topics that you'll be dealing with in this current year. Even when you're dealing with your costing, these elements are going to be important for you, right? So now, it further states that the junior accountant correctly identified the two performance obligations, right? So now, based on that, we can conclude that we have two performance obligations, right? So the order was ready on the 1st of November 2022. Treasury inspected the order, confirmed that they had been packed correctly according to the specifications provided, and immediately settled the full contract price of 557,500 on the 1st of November 2022. Now, this part, I'll take your hand, Nomfundo, now. So now, this part essentially tells us that the bill and hold criteria is successfully being met because of now we are holding stock that belongs to the customer as they had already settled this transaction, right? So before I continue, Nomfundo, can I take your question?
Hi. Now I was wondering how are you able to tell between the performance obligations and the promises? Like, how are you able to tell the differences between the two?
The difference between the performance obligations and the promises, right? So first thing that you need to do, it is you need to consider step two, right? So now you need to consider step two. So we are here. Uh, let me do this. So essentially, we are looking at step two, right? So now Likely in this scenario, everything was provided, right? So now, if information is not provided on the performance obligation, I made a typo here. Okay. So you need to consider this criteria. I'm going to make an example on a house, right? So I think that should answer our question. So let's say you are building a house. So as you are building a house, you are building it for a customer, right? So now, um, you have place the door onto the house. You have done the roofing on the house. Okay, so after you have done the roofing on the house, you have done the windows. So this is what you promised to the customer, right? You have done the windows on the house. So now this is the complete house that you have provided to the customer. You have done the doors, you have constructed the building, you have done the roofing. So you have done four things, right? So let me write them here. So namely, the first thing that you have done is the roof, right? The second thing, it is the windows. So these are the promises in the contract that you promise the customer, right? And then you have the door, and then obviously the building, right? So now, these are four promises to the customer. Now, we need to answer this question for us to be able to know whether we can recognize them as separate performance obligations or as a performance obligation, as one performance obligation. So now, first question, can the customer benefit from the roof on its own or together with other things that are provided? Right? So, yes. So is the roof separately identifiable, right? Meaning that it is not combined to form an output, it is not modified, and it is not interdependent. So now the roof is not a separate performance obligation. Why? Because of now, it is not separate, it is not separately identifiable. Because of, do you agree that the roof is dependent on the house? The customer cannot benefit from the roof alone if the house is not complete. You had promised the customer that you are going to build a house, which includes the door, the windows, the roof, and the construction of the building. So if you go to the customer and say, here's a roof, the customer is not going to benefit because of what are they looking for? They are looking for the house, right? So now it is interdependent. But now here's a tricky one, right? So the windows, with regards to the windows. Now, can the customer benefit from the windows alone or together with the construction of the house? So it is yes. So now we answer the second part of separately identifiable. Um, are the windows modified? So if they have been cut into dimensions that can fit this house alone, then it is not separately identifiable, right? Now, are the windows dependent on this house? So obviously they are dependent, right? But now, if these windows can be sold to anyone else, if they can fit other houses too, then they are what? They are separately identifiable, meaning that you can sell them alone. So the fundamental principle that you have to take note of is, can you sell the separate promise alone? So are these windows sellable? Can you, as the person who's going to be the homeowner, can you sell these windows in their form? Right? So that's something that you need to consider with the windows. Now, the door, same applies. Can you sell the door? Right? Can the customer sell the door? Or is it fixed to this building? And all of this will be provided to you in the question, whether it is according to the specifications of the house or it is just a door that has been bought and can be sold to anyone. Now, the building, obviously, now you can consider the perspective that the customer cannot benefit from the building alone. What will the customer do with a house that doesn't have a roof? What will the customer do with a house that doesn't have windows and doors? Right? So the building cannot be a separate performance obligation, right? So those are the things that you have to consider. But now, let's say the doors are according to the specification of this house, the windows are according to the specifications of this house, then essentially on this, you would recognize only one performance obligation, which is what? Which is the construction of what? Of this building. So you would have one based on what we have said. So there will be one performance obligation. Does it make sense, Nomfundo?
Yes, okay, I think I get it. So anything that I don't have to notify and I can sell it on the outside market, I can say that that is not a performance obligation.
That it is, you can say that it is not separately identifiable.
Okay.
Yes.
Okay, okay. Thank you. I think I get it now.
Okay, great. So now in this one, we are provided with the two performance obligations, right? So um, I'm not going to waste time on this part A as it is more of us answering the theoretical aspect, right? I want to invest most of the time in part B, where we would be doing the journals, right? Okay, so but just to answer A, revenue, we are dealing with what? Recognition. So now in these steps, we need to consider recognition. So recognition is A, it is one, not A, it is one, and then performance obligation, it is recognition. Determining transaction price, it is measurement. So if you are asked a question from the perspective of measurement, you are going to answer 3 and 4. Then 5, as it states, it's when to recognize, right? So obviously, you can recognize revenue um, at a point in time or over a period of time. So at a point in time, normally a transaction can have two. If you buy a cell phone contract, you are getting the cell phone today. So the cell phone you are going to recognize for it at a point in time. But the data that you'll be getting on a monthly basis, it will be recognized over a period of time because of you are not consuming the benefits at one go, right? So it will be recognized over the 36-month cell phone contract, 24-month cell phone contract, or 12-month cell phone contract, right? Great. This also is a similar case with the car and warranty, etc. Um, Now let's dive into the scenario, right? So we are only interested in the recognition criteria, right? So now the fundamental principle that you always have to state when answering a revenue question is that um, an entity will recognize revenue after satisfying a performance obligation, right? So um, we could reference to this scenario, we could say Pixie will recognize revenue after satisfying a performance obligation, right? So that's when PPE will recognize revenue. That is something that you have to take note of, right? So further, you could state that revenue is recognized when control is transferred, right? So revenue is recognized when control is transferred, right? So that's something that you could state, or you could reference it from the IFRA standard as it is, but you will still get your 2 marks here or 1 mark depending on the examiner. So now, something that you need to note or that you need to understand or that you need to memorize. It is the indicators of control, right? These are very crucial. You need to know the indicators of control, right? Why do I say that? Because of now revenue is recognized when the control is transferred. How do you know when control is transferred? You will know by the indicators of control, right? So, what are the indicators of control? It is when the customer receives the product. Normally, sometimes this receiving part, it is when the customer receives the rights and obligation, right, of the product. Not entirely receiving the product in its physical nature, the rights and obligations, right? So now, when twice a RAM confirm that everything has been paid correctly and settle the full contract price. So, yeah, there is an indicator of control. Another indicator of control, it is where they mentioned that Treasury will be responsible for insurance costs when they are stored, right? So when they are stored at Pex's warehouse, it is when control will do what? It is when control now will be transferred. Because of now, what is this sentence stating? Treasury is responsible for the obligations for the security of these toys. Insurance costs are incurred by Treasury, meaning that this is when control is going to pass, right? Okay, so now, what you could state is that Treasury um, will be or um, is responsible for insurance cost, right? So that's what you could state, right? So what you could further state regarding the purchase price is that Treasury settled the full contract price on the 1st of November. Treasury settled the full purchase price on the 1st of what? On the 1st of November 2022. Right, that's what you could state. And therefore, essentially, this is the obtaining of the legal title of this, right? Which is not necessarily important, but you can add it. Now, since Pix is going to hold this in their storage for Treasury, right? So meaning that now this product will remain in custody of Treasury as stated in the scenario, right? So the toys will remain in the custody of PPE on the transaction date, right? So therefore, this is a bill and hold sale, right? So therefore, this is a bill and hold sale agreement. Okay, so now what you could further state is that you can state the criteria of the bill and hold criteria. That is not a problem, right? Because of now, you can just justify the bill and hold criteria. So in order for you to justify this, you would state the criteria for bill and hold, right? So let me write it for you, yeah? So the criteria for bill and hold is as follows, right? So the first one is that the reason must be substantive, right? Substantive. Okay, so that's the first thing that you could write. So now, what does this mean, right? It means that it must be requested by the customer to hold this product, right? So what you could state is that Treasury RM requested Pixie to keep the figurines in their warehouse. So this is what you can write. So what is important when answering a theoretical question? You state the theory as per if phrase. Then you apply to the scenario. What I'm doing now is applying to the scenario. If you only write the application, you are not going to maximize your marks. But if you write theory and you apply, you will be able to maximize your marks, right? So now, this part you could get 1 mark, but when you apply, you get 2 marks. So this increases your chances of having higher marks in your assessment, right? So now, um, so Treasury requested Pixie to hold the toys for Treasury requested Pixie to hold the toys for them. So that's what you could write. You don't need to write a long paragraph, but this will ensure that you get your marks, right? So the product must be, another criteria is that the product must be identified as belonging to the customer, right? So this is the criteria. The product must be identified as belonging to the customer, right? So now, how will this be identified? So Toys R Us confirmed that they had been packed according to the specifications, right? So that's what you could write. So Toys, so now I'm applying, right? Let me just do it in brackets to have consistency. So now, Toys R Us confirmed that they had been packed correctly according to their specifications. So now, you could further state that, which is another criteria, the product cannot be sold to another customer, right? So the product cannot be sold to another customer. How do we know? These toys were manufactured according to their specifications. So it is specifically made for them, right? So the toys are designed according to the specifications of the custom or of treasury, right? So now remember we are dealing with the revenue recognition, right? So before I continue, Alisa, can I take your hand?
Sir, are you going to share the link of the recorded video because I missed the first 20 minutes part of the video.
No problem.
Okay, thank you, sir.
Okay, so now, as I am going to continue now, remember now, as much as we are going to link the scenario to the theory, etc., we also need to link over everything overall to the conclusion, right? So what is the conclusion? The conclusion is discuss when should PPE recognize revenue, right? So now, when we need a date. So remember our fundamental principle. PPE will recognize revenue after satisfying a performance obligation. Revenue is recognized when control is transferred. So now, control, when does it transfer? It transfers on the 1st of November 2022. Because of this, it is concluded in the indicators of control, right? Okay, great. So now, revenue will be recognized. Let me just do this. Will be recognized on the first, right, of November 2022, right? So this is what I just wanted to highlight on revenue. As much as we didn't write a lot of points here, but we have passed this question because of now. If we count our marks, if we count our marks, this would be, if we count our ticks, this would be 1, 2, 3, 4, 5. Now, here we have stated during application. So it is going to be what? 6 and 7, 8 and 9, 10 and 11. And then for stating the date, 10, 11, 12. And then we would also get our communication mark, which is an extra mark. So should the examiner be stingy on certain points here, they are more than welcome to deduct 3 points from us. We would still excel in this question. If they decide to give us 1 mark for each, we would have gotten 10 out of 11. So 10 out of 11 is essentially 90 something percent. So we have passed this question. without even wasting a lot of time when writing on this question, but you have stated all the relevant points that are definitely going to be in the memo, right? So we don't want to state things that are never going to be in the memo. That's very important. Do not overwrite non-applicable things, right? Rather write what's applicable, then move to that other question. When you have time, you can dump all the theory that you can think of revenue that you might feel is applicable to the scenario, right? So now, yeah, revenue will be recognized on the 1st of November 2022. Essentially, we have dealt with step 5. Revenue will be recognized at a point in time. So the 1st of November 2022, it is the point in time, right? So the performance obligation, we don't need to identify them. They had been provided for us. So step 2, we did not need to do. The contract, we did not need to state whether the contract exists because of the question told us there's a treasury contract. So I'm not going to argue with the question. So essentially, yeah, what I was discussing, I discussed the core principle of revenue, right? And then I have concluded the recognition of revenue step 5. So nothing much that I did, but I excelled. So any questions before we do the exciting stuff? I hate theory, but it is where you can score easy marks. Now when we do the journals, it will be more interesting. Any questions on what we have just done now? Okay, great. So now let's move on to part B. So part B, we need to do the journal entries. Interesting. So journal entries. Before you do anything, start by drawing your, sorry about that. Before you can do anything, start by drawing your general journal, the general lecture. So now we are going to mark our general journal. So now this would be details, and we would have what? A debit, and we would have a credit. Just before I dump all this information in here, I'm just going to refresh a very dumb principle, but I just need to refresh it, right? So we always, right, do the following for accounting. For assets, right, we always debit. So assets, when we are increasing them, we debit, right? So essentially what I'm saying is that assets increase. Let me do this. So assets increase on the debit side, and they decrease on the credit side, right? For liabilities increase on the credit side, and they decrease on the debit side. Income increases on the credit side and decreases on the debit side. Expenses do what? Expenses increase on the debit side and they decrease on the credit side, right? So this is the fundamental of accounting. As much as all of you guys might know this, I'm just doing it for that one individual who forgot this. This is the fundamental in accounting. This is something that you always have to keep in mind. You should always know of this. So I'm glad I addressed it. So now let's go back to our general journal, right? So now note number 2, certain property. So now on the 1st of November, let me do this. So on the 1st of November 2016, Pixie purchased a property in Senton for 5,000, right? So not 5,000, 5 million. So this 5 million consists of land of 1 million and consists of a building of 4 million. The property was acquired to be used as Pixie's headquarters. So Pixie management considers the land portion of the property to be significant in relation to the total property. So what do they mean when they say significant? They are not just stating this because of their board, no. So what they are trying to tell you here, it means if something is significant, you are going to account for it separately. You are going to recognize it separately. You are going to measure it separately, right? So this significant is not here for entertainment purposes. No, it is to guide you that this land is going to be recognized separately from the building, right? So let's move on now. On acquisition date, Pixie estimated the useful life and residual value of the building to be 10 years. So the useful life is 10 years, right? Now, the residual value is 100,000. So essentially, when we are going to calculate depreciation, we have to remove what? We have to remove the residual value first before we can calculate depreciation. So now they are telling us that the property was available for use as intended by management on the 1st of January 2016. So this is the date we can start to depreciate, right? Now, that was more of the property than the land, right? Of the building rather than the land. So now it is more of the land. So we are given fair values of the land. So essentially what I can write this is that the examiner wants me to go and revalue the land. Without even reading further, the examiner wants me to revalue the land. Okay, so now, on respective dates as determined by the independent tone appraiser were as follows. So these are the fair values, right? So when dealing with journals, I love to take note of my date, my year end. So 31st December 2022. I used to mess up the date when I was still a student. Maybe I could have calculated depreciation wrongly, right? Because of I didn't take into account the correct year end. Because of sometimes, especially when you are doing your masters, you could find that you are given a lot of companies and those companies have different financial year ends. So it is very easy to mess up the dates. So now, let's continue. So now I have taken note of my financial year end. So it will help me to not mess up the depreciation amounts, right? So, and also when to fair value and when not to fair value. So, as we read further, the carrying value of land did not differ materially from its fair value on acquisition date. So meaning that on acquisition date, at not acquisition date, at year end of 2016, there were no revaluation because of the fair value did not differ from the carrying amount. So there were no revaluations in 2016. Revaluations only started in 2018. So it is the accounting policy of PEXI to account for the building in accordance to the cost model. Depreciation is accounted for in terms of the straight line method. Land is on the revaluation model. So what they are telling you here is that land is on the revaluation model, so we do not depreciate. We do not depreciate land because of it is on the revaluation model. But the building is on the straight line method. We are going to depreciate it over what? Over its estimated useful life. Right? So first things first. So what I'm going to start with, what I am going to start with is, you can choose for me in the chat box. Should I start with the land or should I start with the building? So you can choose for me in the chat box. So the contract will finish with it. It's not a problem. We'll do it after. So what I want from the chat box, should I start with the land or should I start with the building? Okay, building. So everyone wants me to start with the building. Okay, so the building, we are interested in this first part, right? Okay, so we are interested in this first part. So as we take careful consideration of our year end, 31st December 2022. So this property was purchased 2016. So I'm not going to do the purchase transaction here because of it is all long gone been done in the 2016 financial year. Now, what I am only interested in, it is the subsequent measurement of this building, right? So it is the subsequent measurement. So with regards to the subsequent measurement of a PPE item, what you would have is the depreciation. Because of this building wasn't sold, right? This building wasn't sold. There's nothing more that you can do but to recognize depreciation, right? So now what I am going to do is that I am going to take the cost of the building. So I am going to take the cost of the building. I am going to reduce the residual value. I'm going to reduce the cost by the residual value. Now, what I'm going to get is my depreciable amount. I am going to divide by the useful life of 10 years, right? So after I do that, I am going to have an amount of 390,000. So this 390,000 is going to be my depreciation amount. So I'm going to debit my depreciation. Why am I debiting depreciation? Because of depreciation is an expense. Expense increases on what? On the debit side. So that's why I'm doing that. Right? So the contra account will take the opposite side. So now, before I continue to the land, oh, the residual value. Yes, I made a typo. 100,000. Made a typo. So now this is what we are going to do, right? So now, any questions that I should take before we move on to the land? There's nothing more we can do with the building. There's nothing more, mostly. Any questions before I move on to the land? Okay, so now I am going to move on to the land. So with land, we don't depreciate because of it's on the revaluation model. What can we do? We can revalue, right? We can revalue the building. So now this is going to be very interesting. Before I even do that, let me just explain it. So with land, right? It is on the revaluation model. As I can see, it has been revalued above the cost and below the cost. That's the first thing that comes into my mind when I see such numbers, right? So when such things happen, when something has been revalued above the cost and then subsequently been revalued under the cost. So now I need to think of my basic principles of revaluations. So now, here, um, I am going to have the cost, right? So this line is going to represent the cost, right? So the cost is 1 million. Okay, so now whatever that's going to occur that is above. So whatever that is going to occur that is above, right? Would be what? Would be a revaluation surplus. So yeah, in the green side, it is a revaluation surplus, right? So now we are in 2022. So the land was essentially at 1,050,000 at the beginning of the year. Because of that was the last revaluation. So meaning that there was a revaluation surplus of 50,000 because of everything above this is a revaluation surplus. So this 50,000 is a revaluation surplus. Now, anything below it is a revaluation deficit, right? So anything below is a revaluation deficit. So anything here is a deficit. So we had revalued to what? To 970,000. So here we have a 30,000 revaluation deficit. So now, why am I doing this? Why am I just drawing the line? Because of now, I could have just done one journal. But one thing that students always confuse, when you are below the cost, this thing goes into P&L. When you are below cost, this thing goes to P&L. When you are above cost, this thing goes to OCI. It doesn't matter what you name it. You can name your revalue, you can name this a fair value gain, a fair value loss, right? But the most important thing is that this is an OCI item, right? And the other one is a P&L item. This is very important. If you are asked to prepare statement of profit and loss, you would know that this part will go to the P&L section. I mean, this part will go to the P&L section, and this part will go where? To your OCI section. If you are asked to prepare your statement of changes in equity, you would know this would go to your revaluation surplus, and this would go to your or revaluation reserves, this part, and this would go to your retained earnings, the black part, right? So now, we can do the journals, right? Before I continue, is everyone still on track with me with what I had just done here? Everyone still on track? Okay, I'm seeing thumbs up. That's great. I see a checkbox. Let's see. So, is the revaluation deficit? Yes, it is part of, not operating, yeah, it is part of expenses. The expenses, operating expenses, so it's fine. Yes, Temba, to answer your question, yes. So it is part of the expenses, right? Other operating costs. So now let's do the journals, right? So now we understand the logic, right? So now what we are going to do, we are going to have our revaluation surplus. Revaluation surplus, right? So we had already done the calculations here, right? So now with our revaluation surplus, our amount is what? Is the 50,000. So revaluation surplus is an equity item. Equity increases on what? On the credit side. It decreases on what? On the debit side, right? So now our revaluation surplus is being decreased. So this 50,000 would be debited. Okay, so now our revaluation deficit. So our revaluation deficit, so our revaluation deficit of 30,000, right? It is an expense. An expense increasing where? On the debit side, right? So now overall, what's going to happen to land? So overall, what's going to happen to land? Land is going to decrease with 80,000. Land is an asset. Assets decrease on what? On the credit side, and they increase on the debit side. Okay, so I see something in the chat box. Okay, there was nothing. Okay, so now I am done with the certain property. Free easy marks here. Free easy marks, I won't lie. Now, some things which are not an easy mark, but not really. Remember now, okay, Lerato says, why is the fair value on 31st December 2018 not taken into account? Because of in 2018, I mean in 2020, we would have revalued from the 1.1 million to this 1,050,000. So this adjustment would have already been done in the 2020 financial year. So that's why we would not take into account the 2018 financial year as it has been adjusted for in the 2020 financial year. Does it make sense, Leonard? Okay, great. I think there's another question in the chat box from Yaya. Why is there valuation surplus on the debit side? Because in 2020, we had recognized a revaluation, in 2018 rather, we had recognized the revaluation surplus of 100,000, right? So essentially what happened in 2020, what happened in 2020 is that, or 2018 rather, the land was revalued to 1,100,000. So we had recognized the revaluation surplus of 100,000 from this cost, right? From the cost. So from year until year, it has 100,000. So now in the 2018 year, we had utilized the 50,000 because of from 1.1 million to the 1,050,000. We had decreased this revaluation surplus by 50,000. Now in this year, we are increasing it further. That's why it goes from being a credit to being a debit because of we are decreasing the revaluation surplus. We are essentially getting it to zero before we can start recognizing a revaluation deficit. Andile says, why is 80,000 on land? So the main reason for land being at 80,000, it is because of we have added the losses or the expenses or the unfortunate revaluation because of now. If we take 1,050,000 and we deduct the 970,000, land has lost its value by 80,000. So land has decreased by 80,000. Here we are just breaking it down into the relevant expenses, right? So now, does it make sense? Okay. Andile, does it make sense?
Yes, it does. Thank you. I get it.
Pleasure. So now, we are going to move to the other part of part B. Remember, it's a journal entries for certain property as well as the treasury contract. So the treasury contract, this part. So we need to do the journal entries. Okay, so now anyone willing to tell us on how we can do these journal entries for the treasury contract? Because of now, I see that, okay, let me give you a hint. Treasury settled the full purchase price of 557,500. Okay, Zukanya says, would it be wrong to say debit revaluation loss of 80,000? Yes, you would be wrong because of the 50,000 goes into OCI and the 30,000 goes into P&L. The only way you would be right is if you state revaluation loss, but you separate the 50,000 and the 30,000, one into OCI and one into P&L, right? So that's the only way that you would be correct. Okay, so continuing with the treasury contract. So now, what I see is that treasury had done payment, right? So treasury made done payment. So me as the entity, what's happening? I am receiving money. How much? 557,500. Right? But now, when we are going to consider everything, we had sold 500 toy figurines, right? And Pexi charges 800, marked up with 25%. So that's what I can recognize revenue, right? So now revenue would be the 500 figurines. The 500, I'm getting it here, right? Because of that's what they wanted to manufacture, right? For this special order. Now I'm going to multiply it with the cost of 800. I'm going to increase the cost with the 25%. I'm going to mark up it. I'm going to mark it up, right? Okay, so now this is going to give me an amount of 500,000. So my question for you guys, I see that there is a balance here. These things are not balancing. I have 57,500, which is unaccounted for. So what would be my journal name here for accounting for the missing item? What would be my journal name? In the chat box, you're more than welcome to unmute, or you're more than welcome to type in the chat box. What would be my journal name for this one? Sure. No, it can be insurance cost. I get the logic of insurance costs, but it can be cost of sales. Cost of sales is a separate account for this. It's on a separate journal, not this one. So the cost of sales can be 57,500. The cost of sales would be the 500 twice multiplied by the 800 cost. So that can be. So Lindy says contract liability. Okay. So now, a lot of you guys are asking what is a contract liability? So a contract liability, right? So a contract liability is some sort of an account that's also known as income received in advance, right? So remember now, Toys RM does not have storage, so they requested Pixie to keep this toys for them. So they paid them an amount in advance, right? So this amount paid in advance, in revenue, we call it a contract liability, right? It means that the customer is paid, but now the entity has an obligation to deliver the performance obligation. Remember, storage costs are also a performance obligation. So it means that the client has delivered their cash promise. Now the entity is left with the obligation of fulfilling the performance obligation. Now, a contract asset, it is not part of this, but I'm just making you guys aware of it. A contract asset, it is when the entity has provided to the customer. It is only now waiting for the customer to pay. Right, that's the opposite. So, this is essentially an income received in advance account, but in revenue, it is correctly called the contract liability. Right. I hope that makes sense. Mabuza, can I take your question?
Hello, am I audible?
Yes, you are.
Okay, so my question basically is, since contract liability is basically income received in advance, so the thing is, we received an extra amount for a performance obligation that we haven't satisfied as yet. So
Yes.
hence it's a liability. But then, if that period of us storing these toys passes and then the owner comes to fetch them, that would mean that our performance obligation has been satisfied. So we would have to somewhat reverse the contract liability and recognize revenue.
Perfect.
Okay, thank you.
Spot on. This is what we are going to do now.
All right,
Okay.
thank you.
So now, for every sale that you account of, there is a cost of sale, unless if the required sales do not do the cost of sale. So that's the only exception. Or unless if you are dealing with a service company that doesn't have cost of sale. So for every sale, there is a cost of sale, right? So likely in this question, the cost of sale is very straightforward, right? So now we would have a cost of sale, and this cost of sale, right? We would take this 800. We would multiply it by what? By the twice manufactured for this custom, 500. This is going to be my cost of sale. Cost of sale affects what? Inventory. Every time I take out my inventory, obviously it's going to decrease. So I have to do what? I have to state it. There's no way. I just have to state it. So that the summed up amount gives me 400,000, right? So my inventory is going to decrease because of it is an asset. Assets decrease on the credit side. So cost of sale is what? Is an expense. So I'm going to write 400. But when you guys are writing your test, do not write cost of sale. I mean, do not write COS. normally would be penalized not getting the general month. You need to write in full cost of sale. Just like here, do not write depre. Write the full word, depreciation. Here, accumulated depreciation. Do not do these abbreviations I'm doing. Here, I'm just doing them to save myself typing time, right? So now, what we are now going to do, right? Remember, this performance obligation of the storage cost, it is not the sale of the toys. So this storage cost, we are going to recognize them over time, right? Because of now, every month we are going to keep this twice. So this storage cost, we are going to charge it, right? Until Treasurer Rem collects the figurant on the 31st of January 2023, which means it is 3 months from the date of purchase, right? So essentially from the 1st of November to the 1st of November 2022 to the 31st of January 2023, it is 3 months, right? Okay, perfect. So that's 3 months. Now, this storage cost, it means I'm going to recognize them over 3 months, right? I'm going to recognize them over 3 months. So now, this income received in advance, so-called contract liability, I am now going to reverse it, but I'm now going to apportion for the months that have passed. Remember what I stated in the beginning. It is always important to take note of your year end to avoid us recognizing the full 57,500. We are now going to recognize until 31st December only. Right. So it means I'm going to reverse this contract liability over 24 months. I mean, over 3 months, right? But only for 2 months. So I am going to recognize revenue for these 2 months. As we have satisfied the performance obligation for the 2 months only, we are left with the 1 month, right? So what I'm going to do, I'm going to take the 57,500 and I'm going to multiply by what? I am going to multiply by the 2 over 3. That's what I'm going to recognize revenue with, right? So let me calculate this quick. This is going to give me I even made a typo, yeah. Yes, times 2 divided by 3, right? So 38,333. This is what I'm going to recognize revenue with. 38,333, right? Mabuza, can I take your question?
Yes. So I just wanted to understand the thought process behind us concluding that revenue is recognized over time rather than at a point in time. So is it because the customer is somewhat getting the benefits as we are storing? Because I feel like there can be a little bit of a confusion as to think maybe they would get the benefits after you've stored for the whole. I just wanted to find out what was that thing that proved that it should be recognized over time rather than at a point in time.
Okay, so the fact that the customer has obtained the risks and reward, right? Meaning that they are paying for the insurance cost. So as they are paying for the insurance cost, so the risk is with the customer. So our obligation is to hold this for 3 months, right? So we are going to recognize revenue to the extent that it is not reversible, right? That's another fundamental principle of revenue. You have to recognize it to the extent that it is not reversible. So For November, we had stored. Even if the customer comes in December, we are going to take the storage money for November. So for December, we have stored. If the customer comes on the 1st of January, we have already recognized our revenue for the first 2 months. So we are recognizing this revenue over a period of time over us certifying this performance obligation, right? I'm not sure if I've explained it well. Does it make sense,
Um,
Mabuza?
yes, it does. You have so basically the performance obligation here is the storage. So by virtue of us having provided that service for November and December, that's a performance obligation satisfied from our side.
Yes,
Okay, thank you.
pleasure. Okay, so this um okay, any questions? Any questions? You are more than welcome to unmute or type in the chat box. Anything is fine. You have the opportunity to ask questions. Even if it's on another question that you've been doing and there's certain elements that are applicable here, you are more than welcome to ask.
Sorry, just one final question.
Yes.
Yeah, I got a bit confused when you were doing the house example. So basically, there we were trying to find out the difference between a promise and a performance obligation. And within the house, there's four promises that you've spotted: the roof, windows, door, and building, right? And
Yes.
then you spoke about the fact that I understood the roof and the building that they can't just like operate on their own. They need the other stuff in order for it to be like a full thing, right? But then you explained the windows and the doors, and you said that with the windows, if we had bought them and they're not specialized, we can then resell, which then means that they are separately identifiable. And I think that for the doors, you said the same thing. However, the conclusion was that it's one performance obligation. So I think maybe I got lost because I thought where you were going with it was that you were going to say maybe the windows and the doors would be two separate performance obligations. I don't know, but I think I got a bit lost there.
Okay. The reason why I concluded that this is one performance obligation, I stated that the doors and windows, let's say, for example, they are made according to the specifications of this house, meaning that they cannot be sold to any other person. That's why I decided to make this one separate performance obligation to make the example easier to understand. Does it make sense, Mabuza?
Yes, it does. So just one final question. So if the windows and the doors were not specialized, ne, and if they
Yes.
could be sold, can we then conclude that there's three performance obligations here?
Yes.
Okay, thank you. I think that is where I got lost. Thank you.
Okay, no problem. Okay, let me look at the chat box. So, did you already do a topic for income tax? Um, I have done a question on income tax, but we are still going to do more of income taxes. I think tomorrow I also have a class on income tax for FAC at 8 p.m. Tomorrow is Monday, right? Yeah, I think FAC at 8 p.m. This is where we'll be dealing with income tax. And also be dealing with income tax the other week, and also will deal with it integratedly. So with all the topics that are going to be applicable for your test, when we are dealing with our revision, right? Just before you write. But now we'll be dealing with the principles of income tax without them being integrated a lot, right? I hope I answered you, PM. Temba, what does the residual approach mean and what does it indicate? The residual approach in terms of what? In terms of depreciation or in terms of what? Residual approach in revenue. There is not a problem. So the residual approach in revenue, it is some sort of revenue recognition method, right? So essentially, there it is used to determine the standalone selling prices, right? So when sometimes a service or a product is variable, right? So, but I don't think that you'd be asked this. I don't think that it would be asked, but it is when the selling price fluctuates of a product. Maybe sometimes it can be 30 rand, the next time it could be 40 rand. And normally, this is when you're dealing with shares, right? So if you are buying shares today, they can be 15 rand, tomorrow they can be 12 rand, the next month they can be 18 rand. So that's when the residual approach is most likely going to be applicable. But I don't think you'd be asked such a question at your level. It is very much high level because of it integrates IFRS 9 and deeply so derivatives of IFRS 9. So I don't think you'd be asked that. But to answer your question, it is when you're determining the selling price of a service or a product that has a price that fluctuates, right? Or sometimes it can be uncertain, right? Um, Normally, if you were to be asked it, but it is not normally, um, but I don't think it'd be asked it now. No, I don't think it'd be assessed on it. It's high grade. Okay. Are you fine on that one, Temba? So, if there are no further questions, good night, everyone. All the best with your preparations, and may you make this year a success. Good night, everyone. So those who want the recording, they can send me a text. Then I'll share to them the recording tomorrow. Tomorrow evening. Yeah, I'll send it tomorrow evening. Bye, everyone.
Thank